Yeah, we're live, guys. Okay. Welcome, everyone. Evan Aldo here. I am live with
Hello.
Paul Sampson from DataDash, formerly known as CVO Crypto. Um,
Is it data or data? It's the ever going debate.
if you say data, that's more the British way to pronounce it, I would think, right? Data is more of an American way. I think I'm right on that, right?
I don't know. I always say data. We'll have to have a friendly debate in the comment
I
section.
don't know if that's, yeah, I don't know if there's regions of the US where you'd say data or data. Did I say data originally? I probably said data.
You hit
Yeah,
us with the data. I thought you were saying DADDA, like your
data.
data, you
There
know.
you
I'm doing a
go.
co-host with my data.
Okay, okay. I like it. I like it. So yeah, man. I mean, there's a lot to talk about. It's going to go on for a long time. You got this beautiful. I mean, a lot of you guys know Paul Sampson watching. I always appreciate you guys smashing the like button here. And how about I get you? I don't know. How about you talk about this chart? What are we looking at? What's this fib level? 54K.
Oh, are we sharing a chart? Okay, I wasn't sure what we were looking at here.
Yeah.
Um,
Well, you could
yeah,
share
so
show a different chart, but yeah.
yeah, we could start with this. I mean, it's a good one, and it's funny because the last stream that you and I did, we I feel like we try to go like every 6 months, kind of have some big,
Yeah.
macro viewpoints. And you and I actually were on stream. I'd like to say like October, must have been like 14, 15, mid October, right? It was like right in the beginning of
Hmm.
Q4. You were kind of on about the 4-year cycle. I was looking at the potential for the next few months to still be a little bit bullish.
Mm.
And yeah, we definitely got the rollover there, right? So. I kudos to you for that one because I think you sold everything pretty much at the high.
End of October, so not really. What was it? Bitcoin was down to maybe 100 at that point, but yeah.
Nice, nice.
I mean, it wasn't completely 4-year cycle that I was going on, but
Right. Yeah, I know.
yeah,
Remember,
but
there's like a confluence
combination
there,
of
but
yeah.
it's for me, I'd anticipated a pullback at that region regardless. Like of all of the next like 30 to 40% pullbacks, I anticipated it to come from this like 120 to
Mm.
140. I thought we'd get a push to 130 just in the time of obviously. So it was a little, when we got down to the nook and cranny, it definitely did come in pretty much spot on. This is a 1618 trend-based fib extension. Super simple. On top of that, with the week of the 29th of 2025. Reason I was timing out for that could go along, I guess, with a 4-year type of deal, but we can actually look at some of the timing, which let's just do that real quick, right? So it's kind of a fun thing. So the way I got the week of 2020 or the week of the 29th off of this is a harmonic, so it's a sequence of Fibonacci's. But realistically, if we're looking at just the last bull run, which or the current, if we're still in one or not, who knows? Probably not at this point, but
Mm.
the bottom here, 15,000 up to
It hit
that one.
perfectly. Yeah, that hit
Yeah, it
perfectly.
hit
Yeah,
perfectly for
yeah.
sure. But the time projection for the week of the 29th is coming off of this. So in theory, it's like if you were looking at how long the last bull run took, which is exactly how I timed this out. So essentially what I'm looking at here is it should in theory take the same amount of time to get from point A to B to project that off of C gives us the D point,
Mm.
which just so happened to, basically be last bull run projected off bear market low, which if you went back and did that time and time again, we pretty much have the same things going back in time where you'll see it a lot of times, right? Where people take the time bars of like from like X amount of time or however you want to look at it. But in just trend-based expansions and contracted, just like times to like for things to just basically unwind, essentially, it's going to take that time. So essentially we get that huge expansion. We got a little glitch there. Not sure if you can still see my screen, but
Yeah, I can still see. Yeah, you cut out. You barely cut out. I think. I don't know if
okay.
it's yours or mine, but it seems okay.
Sounds good. And then yeah, just it was the bear market here, which just so happened to be the exact same time frame from there. So far, if you're looking at it in that sense, I don't super prescribe, subscribe to the overall just 4-year deal because there's many things about that traditionally that just kind of broke, such as like no, new all-time high before the halving, altcoin season. Essentially, the alts didn't run a month or two after Ethereum, blah 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 blah. Right? There's all these things that like at least what I was used to in the past were that. So,
Yeah.
regardless, this is the setup that I was looking for, and it had two major targets. and one of which was what we pretty much just melted right down to. I could zoom this in now, right? So this is just time base, we hit it, target base, we hit it. Obviously, we went to 126. But if we zoom it in here, we could see that we came right into the first target of this, which again is just the simple 382 fib retracement of that point C
The
to
bull
D.
trap.
Yeah. And
Everybody
then
was
we,
calling the bottom there, man, on Twitter. Oh my God. Everybody. They were high, like 100x leverage. Oh my God.
really
It was just asking to lose money.
interesting. Yeah. I mean,
Yeah.
it was definitely a region where I was paying close attention because I was anticipating us to do one of these regardless, which was going to be if you zoomed into that time period, right? It was when we get this big range, which actually I'm going to talk about today, or we could both kind of discuss it, where we came down to that level, right? And you range for so long, and almost every time you do something like that, and I'll zoom it in here. Let's see, and we'll just turn off some of this stuff here for now.
Yeah.
But almost every time we get that, just validation, which is basically this right here. Right, that's that 80K, right? Kind of zoned around for a bit. Man, I'm glitching out. You almost always come through and do one of the other here. You take the high, you take the
Mm,
low, right? And then essentially you can still get one of these, whipsaws and then still get the move back up. But once we came down and started closing down beneath this region, and for me it was the 84,000, which was overall that big 382
mm.
level that from the overall ABCD pattern here. Once we started closing down below 84, I was like, oh man, this is actually not looking great here. I definitely anticipated us to push up to like 98 and then down. It just was like looking for that sweep basically of the 80. But once we didn't get it, man, it was just next box.
Mm.
Um, that next region just so happens to be, or just down below us here.
Where
Sorry.
it says Bitcoin? That right?
What's that?
Where
Yeah,
it says
basically.
yeah, yeah, yeah. I like that. I like that.
I'm just moving that. I always do that because I don't put the little stamps or the
I get it.
watermarks on the
Yeah,
back.
yeah,
So,
yeah.
but yeah, man, just big rollovers so far. So we're definitely in a place I think where everybody's getting more comfortable now with like being bearish is the only thing. So I think that we're in, a space where, again, if we're looking at current price action, trying not to get too in the weeds here, even though overall we could probably still head lower here, we have the same exact scenario now occurring where we had this huge drop down. It's been over 10 days. What we're doing, we're just going sideways. This time we're actually getting a nice little triangle.
Mm.
All right. And more times than not, we are most likely going to do the same deal where we're going to have that triangle kind of push here. Most are going to be anticipating that breakdown. We likely get a little sweep,
Yep. There's
then
a
hit
big
the
area.
low there. And
73K is a
yeah,
huge. Yeah, it's gonna be. Yeah. Yep.
so that's kind
That
of what I'm looking
if
at right
you
now. I just,
yeah. I sorry to interrupt. I just wanted to say
no, no, go
if you
ahead.
retrace all the way from May, the first low in May of 2022, it's exactly pretty much it would equate with the 73K sweep or touch and then reject hard. And so your next target was going to be 53, 54. I think that's what you were about to say, right? Before I
At least probably at least taking out this low. So
yeah.
there's a major gold pocket right there, which is the next target of that overall setup, which, taking that setup simple, fib retracement from the bear market low to the high. It kind of pulls it up in that region. Now,
Mm,
this is not in log scale, but this is, the linear version at the moment. But yeah, so around that 50 set, we front ran it pretty well right here where we came down to just on Bitstamp at least, we only came down to 60K. I think we were like 59-ish on other
mm,
exchanges. So to see that like sweep that, I think that that's likely. And then even if we do still get like a bounce back, like a throwback towards like 83 or something like that. I think we're probably going to take that low first, right? That's just kind of where that's just where my head goes when I see these like ranges come out of these bottoms. Because at any point right now, granted, there's people that obviously have shorts, so we could easily, blow some shorts up because there's so many
mm.
at this point. But there's every stop we get to, so many people are now entering the new longs, right? And when you get so much time in a place, it's people get more comfortable. They don't think it's going to go down again. So you get a lot of longs piling in here. So just to kind of wipe out those late longs or not late longs, I guess, just longs in general right here. And then you kind of get those late shorts more than anything. Because people with shorts that are entering today, or maybe they'll enter if we get a push down, they're going to put stop losses right above the local highs and get that push. But yeah, as long as we're below this 84K though, man, I don't see us in a great place at the moment. I'm curious to
Yeah.
hear about your view as well.
Yeah, I think that like if I had to get like I think the next area you'll probably break down like to that 54, 57 right there that you got. Probably early March. I mean, it could be this month, but probably early March. I think that's like the second tax season stuff. A lot of times is in March. Um, and after that, I think you'll recover a bit, maybe come back up to where we are now or something, and then get another leg down, April or May or something. And then my guess, if I had to really guess where a bottom would be, maybe 48K. I think you'll bottom out quicker this time. Like I think it's going to be quicker. I think you could bottom out in May or April or something, 48K, and that could be the area that I would guess. Well, what do you think the odds are that we're going to 34K, that 12-month pivot?
If there was not that pivot there, I wouldn't like heavily keep like ever since the entire run up from 34,000. So essentially back when we generated this
Mm,
was which was what this is it's the average of the year from 2020. Sorry, I got a call coming in.
you're good.
This is from 2023, so it was something that is,
Mm,
generally likely to get tagged in 2024. It obviously did not. This was when 2024 began, and we came down pretty close, got to like 38, and then just took off. So to me, these pivots are pretty high hit rates, right? So in all of
mm.
history, actually, there's only been one ever that has not been tagged
Oh,
in
wow.
the following time frame. And let me see if I can put it on here real quick. It was like 2020 at the time. Let's throw on a bunch here. We'll take a look. So these are them right here. They're generating here, right? We can see that the one is 34. It's never been come back to here. And again, these are the averages of price for the year. The really good one of mine was when we topped at 69K. We got the big drop and we came up
Mm.
and we back tested the new yearly pivot right there. So again, average of price.
Oh, it was
This is
much
like
higher back then, obviously, right?
Well, here's the funny part, right? So
Oh.
this was 2021 top, whatever. You back test this at 48, and then we get down to business
Oh.
here. And yes, I mean, it was from like we went from 35 to 47 without looking at all these right now. Look at where we topped off this year, right? So
Mm.
topped off end of last year. We get a drop right here where we cut a rejection from yearly pivot. So again, this is the average of price.
Wow.
It is very much like a 200-day moving average, but it's for 365 days and it doesn't move. So it's very much a below is bearish and above is bullish type of situation. Got the rejection from there. And honestly, that's like a big nail in the coffin for one. Two was losing 84K. So now we got some ground to recover in that sense. Just on like high time frame average,
Mm.
base to me. But yeah, looking back, 35,000 was left behind. So it has not been tagged. So it's not like it has 100% hit rate by any means. But so far, and we only have 15, 16, a sample size of 16 years or so. But every other time we've been hit. Boom, boom, boom. Back at
Mm.
2018 right here, same deal. 2017 high, get the drawdown, back test where we hit that
Yeah,
region.
they don't look as
Uh,
bad back then. Yeah, they don't because it went under, obviously. They don't look as, yeah.
mhm.
Even the 20K
Um,
doesn't look so bad. We went under it.
yeah,
Yeah.
so but that's the key, right? So I'm gonna just
Yeah.
mark this off and then turn these out because that's the only one that was ever not hit in the time frame that we usually see it met. So which
Oh.
is usually the next year, which was 20K when we got our
Oh,
last
okay.
bull run breakout. And you front ran it right here, whatever. And then it took 2 years to come back down to
Mm.
it. So eventually we tagged it. So with that 35K, mind you, it wasn't the all-time low by any means. Obviously, we went, a subtle, let's just
Yeah,
see,
and the 17. I mean, you could make an
25%
argument
lower.
that without FTX collapsing, 17K probably was the bottom, right? Could you make that argument?
I don't think so. And the reason
Okay.
I say that too is like again, which so far, just keeping it super simple here, even if we're just taking like time frames, and it slightly would bleed into like a 4 year idea, right? But
Mm.
Just going off of simple price action, right? You get the unwind here, your impulse move, your unwind, your impulse, your unwind, your impulse. Generally speaking, you have time frames that we tend to get those big bursts, and then it takes some time to just, like I said, just unwind it. And if we take like fib-based trend times here, let's just take a look here. And I'm just going to go off of essentially the last one, right? So like just the
Okay.
first bear market here that we can see from 2013, and we're going to go from high to our bear market low. And then what we're going to do is I'm going to project that from our high up here. And it essentially gives us 100% in time, which is roughly, our overall bottom right there. It comes in about
Mm,
$3,300. And if we were to do the same thing now and project that same thing, let's just go from the high here to our bear market low.
mm,
Sorry. Um, let's just go from the overall low here to the 2017 high.
okay.
And we're going to project that off of the low here, right? So
Ah,
this
yeah,
low
yeah.
region comes into this area. You get that 69K zone in that area as well, right? So it's like that perfect, like I don't want to call it the 4 year window by any means, but it's just if you kick on things like your gold pocket as well, you'll note in each one of them, which I actually already did this over here somewhere. It,
So Bitcoin's going to 10K, like Peter Schiff said.
yeah, it might, man. You never know. Okay, there we go. I was gonna say I'm super glitchy over here.
A little bit, yeah. You don't see it sound too bad. You cut out in and out a little bit, but nothing significant. Nothing.
Yeah. Long story short, I'll take that off. But yeah, the long story short is based on times. I just, I feel like the FTX and everything like that, it made sense. But either way, 17 to 15, it was what, a $2,000
Not
difference.
that much, yeah, not that bad. It was
Yeah.
like 10%
So
or something. Yeah, maybe a little over
yeah,
10%. Yeah.
could almost
It
argue something similar with like,
it was
whatever this was,
scary
and then
though.
COVID
Yeah.
low.
But man, I sold the exact bottom at like the 15K. Like it was scary, man. Like it was I'm just kidding. But I'm sure a lot of people
I was
did,
gonna
yeah.
say, I was like, there actually, I knew a lot of people that did that, which
Yeah.
was pretty crazy. It was actually the only time I've ever seen like people I even know, like, and pretty wealthy people like that actually bought in the like 60K time. Like they actually probably bought
Yeah.
like the first 60K and held and whatever, and then they were cool with it getting back to like 60, 69, and
Yeah.
then they held it all the way back down through all that stuff, and then literally it was the first time I really ever saw hand over fist people just willing to sell their crypto at the end of 2022
Yeah.
because of they were able to take tax losses and all that. The stock market was still doing decent at that point, so you were able to like offset some gains if you had
Mm,
that with your losses here, but everybody was also very much under the impression that that everything was going to collapse. Binance, Coinbase, they were next, and so it was like nobody wanted to touch it, and then it was just off to the races. And you had
yeah.
like 3 days. If somebody sold it, December 31st, it was like January 3rd, and everything just took off from there. So
I
uh,
think the thing for a lot of people listening that kind of prevents you from making that mistake is like, keep in mind that bear markets for stocks as well. And like bear markets for almost everything usually last like, 8 to 12 months on average, kind of. So, really anything you're holding, if it's down a lot after 10 to 12 months, like give it a couple more months, maybe see what happens. Um, Especially if it's that amount of time. What was I think I zoned out slightly. What was that like target thing you were going to do for a bottom? You were talking about the thing that was going to give you a target price for the bear market bottom this time. Did I miss out? Did I zone out during that? Did you have some
oh no,
other
I didn't have like a anything for that for now at least.
Oh, okay,
I was
gotcha.
just saying. I think you were talking about just the FTX collapse. Like, is that what you mean?
No, the thing you were doing, I was like zoning out slightly. The thing you were doing with the fib
Oh,
levels. Were you able to
yeah,
figure that out?
it was glitching out. I was
Oh, I
just
was
showing
right.
like
Okay,
the gold pockets in time and stuff like that. So, anyway, some of those time frames
gotcha.
they just all line up, right? So,
Okay.
and the last essentially the last bear market low projected off of the last high was exactly on November 9th.
Hmm.
Or November 8th, whatever it was. So right when FTX collapsed. So it just happened to be that. And again, these are like they're not necessarily, it's not like looking at highs and lows. It's just pivots in the market. So you don't necessarily know what is going to come there. It's just likely to be a pivot point, right? So
Okay.
where if we're gonna get a shift, if we're, reversal, whether it be, more local or anything, but this was another one. This was where a pivot in the market was likely to occur. It was going to be the week of September 29th,
Mm,
um, which is, interesting. It was like right, I think it was the 6th, right? 6th of October.
yeah,
So
six or something like that. I think I was in
yeah, so that
Vietnam.
was that was 1 week later. So that was
Yeah.
Monday after that. We hit that high and just got that big pullback. So interesting stuff there. It all kind of is. We've discussed
Oh,
this
okay.
chart a
This
lot
is
too over the
guys.
years.
You guys, you got to calm down when you see this. This chart is. I don't get too excited when you see this chart. This chart is gold. This is a gold mine right here, guys.
Well, we're gonna see. But so far, um, the gold and the silver. Speaking of gold, like gold and silver blowing off tops, like the way they have. Whether or not that is the top is the question. But yeah, so for anybody that's not, familiar with this, this is the 18 to 20 year like housing market business cycle, what have you. This is not something I created by any means. This is from Phil Anderson. Again, always give credit. He
Mm.
has a book, The Secret Life of Bankers in Real Estate. So check that out. And he covers a lot of stuff in this. And this was actually one of the biggest, like, it's been like the backbone of my analysis for like high time frame wise, at least for ever since basically like 2016, 2015. And what really got me interested in this was that in 2012, I always remember this story, man, where like I just came across this video on YouTube, and again, it's like such so old, like I can't find it, unfortunately. I don't even know what to put in.
Is
Um,
this the one with the
but
napkin or whatever? When
yeah, the dude drew this exact thing, man, and it
and
was
you
like
were
so
probably like eight
random.
years old watching this, right, or something. How old were
Basically,
you?
man, I thought it was like a VHS tape.
Yeah.
No, 20, it was like 2012, man. So I was, like 20 years old, something
Okay,
like that.
okay, but still very young
Um,
to. I mean, nobody,
yeah, yeah,
most people
yeah.
when they're 20 are not looking up what the housing market's going to do. You know what I mean? Like,
No. Well, then
yeah,
we just came out of like 2008, so all I knew was everybody was in foreclosures and I mean whatever, it was
yeah,
like
yeah.
just a few years after that, and it wasn't like everything recovered very heavily by then. But yeah, 2012, man, this guy was like, if you don't purchase a home by 2016, you won't be able to like at a decent price until like 2030. And I was like, oh, it's kind of crazy what he was talking about, and he drew up pretty much this in a simple fashion, but. Yeah,
Mm,
this is like what Phil Anderson is on about all the time, where you get these 7 to 10 year run-ups is the beginning of the cycles, and this is in theory it's everything's kind of running together, so it's not just necessarily just the housing market, but and obviously not everything is super tied to each other day by day. Where we had Bitcoin so far, had a
mm.
high come in October, but gold and silver still pushed till early this year, so whether or not those are tops or not, but it was just we're seeing like differences in even the housing market itself. Technically, at least as far as the frenzy would go, that was kind of back in like 2022. Even though the housing market as a whole is still roughly hitting milestones of like being at all-time highs across
It's
median boards.
technically the case Schiller. I think it hasn't made a new high since last year, right? Is that the case?
Right, but the median home buy like base is like at all-time highs if
It's
I'm not
not. Yeah,
mistaken.
it's not really down. It's kind of been.
Right.
Yeah, yeah. It's still
It's just
trending
not
up.
down.
Yeah.
Yeah, it's just kind of like staying because nobody's leaving because it's, everybody's got locked in for lower rates and lower prices. Yes, they could sell their homes, but if you get out of that rate you're in, you're going into a higher rate even though the rates are coming down a little bit.
Yeah.
Um, but yeah, it's very interesting. So I've, came across that idea back in 2012. I came across this in like 2016, which again was like a 7 to 10 year run up. You get these black swan events at this mid-cycle slowdown, which is like 2 to 4 years.
Mm.
Generally, it always ends with high inflation, high interest rates, and everybody expects a big market crash at this point, and then we get like several more years of like face melting
And
rallies
I
and
think
just
the
things that
yeah. Sorry to interrupt. I think the last part is 5 to 7 years, right? Is that what it is? I think
yeah,
something
and
like
it
that.
can be, and if you did the math on some of these, it's not all exactly,
Yeah, but yeah,
5 years each, and that's the big piece of it, right? That's why I have this 26 to 29 window because
yeah.
even though that's a huge window, and it could be bigger, it could be 26 to 2030. I don't know. It's just the whole point of it, though, is just even for myself, is just to know that like in this window of time, this is not where I'm looking to, just deploy fresh capital into things as much as possible. Maybe that isn't a great, maybe we still have 20 more years before things top off or something like that. But we obviously all can, agree that we're in a place where the market is like overdone to some degree, right? Where if it does keep going up, you're in a tough place to deploy new capital or make new investments because everything's so high, right? Like you don't
Yeah.
want to
Oh yeah.
make the wrong move and be coming in before a potential big crash. But if it keeps going for 5 years before that, then it's like, oh, you're going to miss out on this. It's very, very tough right now. But this is a period,
Yeah.
compared to where we've been, is where like you want to be more cautionary here than anything. Um, and yes, and then so again, when I first came across that in 2012 and then 2016 and 2018, so I was following this really closely because 2018 would have been 7 years off of 2011.
Oh,
So
okay.
I was expecting like let's see what that big event is going to be that really like hits the markets. And at the time, man, Trump and Korea were butting heads so much
You were
that I was
thinking
like, oh,
that.
this is going to be it for sure. Like this is going to cause something's going to pop off, markets are going to
Mm.
crash, like whatever. And we got a little bit of pullback, nothing crazy. And but then, within now 9 years go in, we got COVID. And sure enough, 2 to 3 years, what did it usher in? High inflation, high interest rates, stressed out our distribution systems across the world. Like everybody expected the markets to be like just nuking in 2024, right? So we had 2 to 4 years of a little bit of actually new highs, but then we got the pullback in 23, 22 and 23. And everybody thought 2024 was going to be this huge crash. And what has it been since, essentially now we're pulling back a little bit, obviously, but
Yeah, we keep
with
going.
Nvidia,
Yeah.
with like everything that is blown through just the roof since 24 to now, it's just been kind of wild. Now we're in 2026. So we're definitely in the cautionary area. And this is just a few iterations of this anyways. Like you could date this back. I've taken this back like 100 years.
Mm.
And it's interesting. It's again, it's wide. It's a
Ancient
wide
Rome.
range of
They have
like a
a.
completion zone. What's that?
I was gonna say you should take it back to ancient Rome. I'm sure there could be something. I mean, silver did go up during the end of when Rome started to collapse. Silver doubled in price, similar to. There even are some parallels. You could look way back.
Yeah.
What's
That's
interest?
that's
You
the
got?
that's the big piece too. It's like, are we in a straight up currency debasement zone now where it's like, the next superpower is emerging? Like, because that's a different, like, whole different range of things, right? That this 20-year cycle could just be like barely scratching the surface of, but it all kind of aligns there.
Well, I think
And
that if you look at it in terms of your Great Depression 2.0, I think it's wiser to compare like what would happen with the U.S. more to what would happened with the U.K. during the Great Depression, because at that point, like it was pretty close between the U.S. and U.K. as the world power. I mean, I would say still the U.K. because of its history was still viewed kind of overall as the world power at that point. And I don't know if you knew this, I didn't know this, but the UK's stock market did not go down 90% like the Dow Jones went down 90% in 1929. It went down like 40 or 50%. So it wasn't even like, I mean, I guess it was debatably like just a bad recession for them. And I think there was more trust in their stock market because they were the world power. Now, obviously, no one really, you weren't really buying or investing in the UK if you were outside of the UK at that point. It was different. It's not like, like people around the world are buying the S&P 500. It's a different game now. But
right.
it's interesting to look at. Their housing market actually peaked in 1925, and their stock market didn't peak until a few years later, I found that to be pretty interesting. So
Hmm.
far, our housing market, I think it depends what you look at, but by some places, in terms of price, arguably it's peaked last year and hasn't made a new high yet this year. So does this mean anything? I mean, somebody who's anti-TA would tell you no, but I mean, it depends. Any comments on that? And I want you to go more deeper into like gold, silver, and how that relates to this potentially.
Yeah, so one last piece of this was that again, Phil Anderson discusses how like at least in the past, right, which that's all we can go off of for the most part, and then obviously it's getting a lot of similarities, is that a lot of times there's like the biggest, like he calls it like the tallest buildings in the world are completed basically. So like you're getting like
Mm,
these huge like infrastructures that are generally built and completed, and it's not because of like the stock market is just doing well and people are just building buildings, but it's just because like things are going well, and it's usually like peak of just liquidity and things like that, and architectural growth and blah blah blah.
mm.
And I haven't looked at this personally, but like I believe he said that like not the Eiffel Tower, the Empire State Building, it was like built like right before the Great Depression, and that was like one of the tallest buildings in the world.
Oh,
There was a couple of other ones, and then on the other milestones here. And then currently, which is again in this like 26 to 28 window or 29, but
Yeah.
my eyes have really always kind of landed. Like I assume that like 27, 29 or 27 or 28 would kind of be where we'd land again. I don't know that. So it's just kind of a
Where we
cautionary
top out,
blanket
you're
here.
speculating? That's your something like where we?
Yeah, pretty much like 20 plus right off of '07, so the '07 top, even
Mm,
though '08 is what
yeah.
everybody kind of always looks back to when the crash hit, but like '07 is when the market truly topped. That's kind of always I was always anticipating something along those lines, but again, it's like, we're near there so much at this point. But in 2028, there's like Japan has the tallest building in their country is supposed to be completed. Miami has oh, you're right next to you.
Miami's got so
That
much stuff. The Faina, that's the one I'm right next to. That's that giant building that's supposed to be real luxury. I don't know when that's going to be completed. I haven't
there's
been.
there's like a Waldorf Astoria or something like that,
Oh,
which
yeah,
is going to be
20. Yeah, there's so much. Yeah, Waldorf. I don't know the date. Sorry to interrupt. Yeah, do you know the date that's
yeah,
supposed to be done? Do you know what year that's supposed to be done?
2028, dude. Right on time
So when would
for the
you?
market to top.
So let's say somebody asking for a friend, someone owns a high rise right near the Waldorf Astoria over there. When should they put their high rise in the market to get the hell out and move to Peru or wherever the hell?
Man, again, we're in such weird times across like unlike these. I don't know, maybe it's just always so hard to tell when you're in it because now we're in it, right? Like this is a time where if you make the wrong choice, whatever. But if at the same time, if you're up, right? Like we're at a place, I guess, like I always pointed out like this, right before Bitcoin just pulled back 50% when we were trading right into 122. Um, I pointed out that if we were going to see a 30 to 40% correction, it was going to come from there. Whether you take advantage of that or
Mm,
not, you have to be willing now. Can you handle that 30, 40%? And then here's the problem, right? Because once we get down to where we're potentially heading, when we get there, we got to reevaluate. And if we lose that, now you're going to wish you sold up here, right? So we don't know that till we get here. So truthfully, like, is it on an aggressive scale? It's like you have a place in Brickell. I think you got that years ago. Well, undervalued of what it is now. It's probably a good idea to consider, looking at what it is now, because if we're going to be stumbling
mm.
across anything like, what I'm anticipating, then that the risk is high right here in these next few years.
Well,
But if I'm wrong,
yeah. I
you
think
can't come
that
at me with the pitchfork. But
yeah, no, I mean it's yeah, I've been talking about this cycle too. I agree. I think the thing to realize though is most real estate corrections have not been as bad as '08 historically in the US at least, right? Like most real estate corrections, like what was 1992, like that previous in the previous cycle. Like that was a lighter correction than '08 in terms of real estate, I would argue, right? Maybe like 20%, 25% rather than like 30 to 40% that you saw, in the
Mhm.
US. So I would think, I don't think it's going to be as catastrophic. I would argue. That's the thing there. I don't think it would be as catastrophic. But if you have investment properties, like if you're just living in a place, like, to try to sell and rent for a few years, if your place is going to depreciate 20 to 25% in value, I don't know if that's always worth it. But if you have investment properties that you're ahead on, that would be kind of the way to do it, I think. Obviously, even
Yeah,
with
of course. Yeah,
like if you live somewhere 6 years, even if it depreciates 20% in value, I think you're better off to do that than rent, assuming you don't have like crazy maintenance costs or unexpected
of
crap
course.
happens.
Yeah.
Um,
It's tough, man. I
yeah,
mean, yeah, if you made a good point because I feel like that's where everybody looks at, right? Where it's like, oh, should I sell my house? Like here, like if it's your house where you physically live at, like, that's it's such a hard conversation there because some people are, the average mortgage right now, man, if you're looking at least in Florida, right? If
yeah,
400K is probably the
yeah,
hands down average cost. And at the current interest rate, you're looking at like $3,000 after everything, per month, give or take. So it's right on
yeah.
line with like the average rent here as well. So it's like, if you are up in, as far as if you're up in that equity essentially, and you want to take that risk of being like, all right, I'm going to sell out and I'm just gonna, I can rent some place for the same amount. And I can sit on
Mm,
100, 200 grand and for a few years. The problem is that how long is that going to be, right? So like you're selling your physical house is always a tough one, and just like when people are always, I think that people mistake looking at their home as something of like liquidity in general, unless they just can't afford it if they lost something, and maybe they lose their job or something like that. Obviously, that would
Mm,
affect everybody, but I think a lot of people look at that very differently. Like even when you're looking at your net worth, right? Generally speaking, you're not supposed to consider your living home. Like it's because, like you said, it's not something that is liquid. You couldn't just offload that
yeah,
easily because you're going to need a home
for
still.
sure.
So
Yeah, yeah,
it's a tough one, man. And the gold and silver thing. Pulling off of the housing market idea, where
yeah.
we're in the window now, 2026. We've seen literally so far a peak of gold, running first thing 2026 to start off January 26th. Um, is that the high, right? And is it but at the same time, if we're going to see any type of collapse, would gold be something that still actually maintains pretty well, like we did see in 2008, at least in 2008. I haven't like off my top of my head, I don't have that much data here on this chart. It only goes back to like 2017. But I know for a fact in '08, like gold was one of the few things that actually held value and actually increased in market cap from '08 to 2012, unlike most other things. We just didn't see this huge run up right before. So that's the really interesting part. And
It's
generally speaking, when
yeah.
you get these big runs, you don't really have a really big issue in, underlying for like 18 to 24 months, let's just say. Because usually that's when investors are running for seeking out that safe haven, but not necessarily when the average person would be. So it's really interesting to me where we're at because again, if we're looking at a potential 2027, 2028 tops in the markets, even though yes, we're dealing with pullbacks right now, like
Mm,
that happens, and we've seen a ton of pullbacks throughout like the last this whole 20-year window. But if we could actually see the next 2 years, maybe Bitcoin gets this bear market year like we have seen in the past, and then 2027 and 2028 is another, rip to the upside or something. Uh, I don't know. It's just interesting because, like I said, the buildings piece is a interesting piece of information. Granted, I'm not like leaning only onto that, but it is interesting to note that it is Japan has the highest building in their country being built and completed in 2028. Florida's tallest building in our state is going to be finished in 2028.
what is the
Uh,
tallest building that's going to be finished in Florida? I mean, is it the Waldorf Astoria? Is that
it's
what?
going to be the Waldorf. Yeah, that's the one.
Oh wow. Okay.
And it's
Hmm.
and there's one in like Saudi Arabia as well. I can't remember the name of it. It's like a Saudi name, but yeah, just interesting stuff, man. And the thing about right now, which is just the contrarian piece of me. Granted, like I said, I'm not like overly being like, oh, just go against what everybody's thinking because whatever, that's not going to play out if everybody's targeting this huge collapse and crash in the markets. But in 2008, there was not a ton of people pointing out that things were about to get bad. It was like Michael Burry and maybe a few others. I know that social media has come a very long way and we have more reach and stuff these days, but it's like everyone is like pointing at gold and silver just top. Things are looking bad. The stock market is heavy. And while all those things are definitely top heavy and they may get some corrections here, maybe this is the highs. I don't know. It just still could roll down a little bit here, correct for a bit, and then still get another run another couple of years. And that's the hard part
That's
where,
what
where we just don't know.
I think it'll consolidate. That's the interesting thing. I was like Googling average bear market times for a lot of different assets. Obviously, stocks and crypto average bear markets usually like 10 to 12 months, 8 to 10 months. Gold is like a 2 to 3 year typical bear market. So if you enter a bear market for gold, it would align with your view where let's say gold consolidates or at least against the S&P 500, it's boring for a few years against S&P 500 and then in 2028, 2029, then it hypes up back again and has another 5 to 7 year rally into the mid 2030s. And then all is kind of done with gold there. And then the cycle resets. And then it would be a good time to get back into the stocks or whatnot in like the earlier to mid 2030s. And that would align with the 18-year Philip Anderson cycle. I think that would be the next time to get into real estate stocks, everything I believe based on the cycle would be probably between like 2032 to 2034. Does that sound right? About right? Yeah. Plus,
That's when my napkin guy told me the next best time to buy a house was going to be. So
I think it's
it
it's
might
every
be,
20 years based on that. About
yeah.
it's not. It was
And
19.
again,
Yeah.
it's
Yeah.
it's is it gospel? No, right? It's
Yeah.
just
Yeah.
it is wild how like I said, at least up until, I mean, so far it's been on point. I can't even
Yeah.
say it hasn't been. Like to note this back from 2011, like I said, for me, I was 2018. I thought it was going to be here. Nope, we went 2 more years. Boom. What did we get? Perfect Black Swan event, right on time.
Yeah.
What did we also get? The 2 to 4 year consolidation, right? 2023. Not gonna write it out because it looks terrible, but 2023 we ended. Uh, so I guess you could call it 4 years almost, or three. It was three.
Yeah.
And then you got high inflation, high interest rates. Everybody expected the market to crash, and then what have we gotten since? It's just so far played out really well. It's just trying to time the top is probably not going to play out well for everybody, right?
So
That's the hard part.
I think, let's talk about, what is, during this scenario, how can you be prepared for, a potential 50% S&P 500 crash, that type of stuff. And, when I look at a lot of stuff, what's attractive to me throughout that period is something that has a good bond exposure, more stable exposure. Berkshire Hathaway is kind of one of those things that reigns out to me because a lot of people talk about Bitcoin going to $1 million, but the thing that I think is going to $1 million by the end of the decade could be Berkshire Hathaway, believe it or not. Half
I
bonds, right?
mean,
And he's been selling. He just sold 80% of the Amazon he
yeah.
had. Um,
How much is that? Because that is like 700,000, right? Or
seven
six
or
hundred
eight
thousand. Like
hundred
they've
K, yeah.
yeah, it's like the most underrated. Like you don't ever see anybody talking on that. That's actually a really good point.
In every time in its history that it's dumped 30% against the S&P 500, it's gone up to make new all-time highs against the S&P 500. I bought the exact, I converted all my crypto that I sold at the end of October into Berkshire Hathaway. Most of not, I bought some gold too and other miscellaneous stuff, but like, S&P 500, stuff like that. But a good percentage of it was Berkshire Hathaway. And I've doubled the amount of Bitcoin I had. Like if I were to buy Bitcoin back, I would have double, even though I only sold Bitcoin at like a little over 100K. I didn't sell at 120,
Hmm.
which is a pretty good trade there. Something that's half bonds, that looks attractive to me. Other things that look attractive, XLE, that's the energy ETF if you're not familiar. I'm sure you know about that. That looks pretty attractive right now. XLP, not going to say any names, there's some crazy people on Twitter that, not crazy, crazy in a good way, but some people, kind of smart people on Twitter talk about XLP, like consumer staples, being kind of bullish for the next couple of years. Um,
Hmm.
Interest rates probably will continue downward. I think we're both in agreement on that, right? That's what most people think too. Um, and as those go downward, that could kind of change the trajectory. I think the Nasdaq is starting to get kind of cooked. Like I think that's going to stop being like the blue chip of outperforming everything other than Bitcoin. You know what I mean? Like I would say, like I think it's SPY is going to show strength against that. And that's a lot. It's kind of hard to. I mean, any out of all the things I said, any TA on that? Any thoughts on those?
Um, I struggle with this piece because it is like the one where it's like, what do you go into? Because yeah, like you're caught at a crossroad if all
Yeah,
that hits, and if we're having dollar issues as well, and then it's like do you want to? I think the best thing to do is probably just to diversify a little bit. It's just finding out which ones. I mean, everything you kind of mentioned is probably uh,
it'll
pretty
hold up
solid
better
picks.
than most of.
Yeah.
Yeah,
Um, as far as TA would go on a lot of those things you just mentioned, I mean, I don't have charts pulled like, for any of those necessarily.
yeah,
And yeah, it's a tough one because originally I wanted to, the whole reason of crypto, or even when it started, was to just gain more Bitcoin, right? That was always the plan. You couldn't even trade against dollars back in 2017. Everything was in a Bitcoin pair. And so you would trade alts and do all this stuff to get, bigger ROIs, and then you would basically just transfer it back right back into Bitcoin to get more
yeah. We all
stack your
tried that
sats.
the past year or two and just lost all our money.
Yeah. Well, then it got, it totally flipped the script because at some
Yeah,
point, Bitcoin, wasn't that huge, even though it's still doing very well. It just, the altcoins for a period of time was just where everybody could make the bigger returns, the 50x, the 100x, and all that stuff. And then when everybody kind of like left the Bitcoin line to go line up for all the altcoins, and then all the altcoins just basically were like, man, we're done now. And so Bitcoin, to answer that, was a big component of that for myself, which was like, looking to offload around this time frame. pick up Bitcoin around there because in my eyes, I was envisioning Bitcoin to be something that would kind of react like gold did in 2008. And it just so
Mm,
happened that in 2008, like I said, where the one thing that held its value from 2008 to 2012 was gold. It did drop a little bit. Don't get me wrong. It dropped like 20% when 2008 financial thing hit. But overall, it like doubled its market cap from '08 to 2012. And it was an interesting just comparison that in
yeah.
2004, 4 years right before the market topped, gold received its ETF. So it was like something that you could see like, the institutions kind of getting all, not that they already weren't, but it was just an interesting piece there. So that when we're looking at that 20-year cycle again, and with potential for that 2027, 2028 high area, if we back that up 4 years from there, when did Bitcoin just get its ETF? 2024, exactly 20 years later than gold. So like
Mm,
in that, it was like there's still a piece of me that, sees Bitcoin kind of being not necessarily this overall safe haven, but something that could kind of, maybe hold a little bit better against, but it wouldn't be like dump everything into Bitcoin type of deal. I think that you're gonna have to diversify a little bit. So, yeah, getting into, some of the things that you had mentioned, are probably going to be the play. I would like to say, yeah, it's tough, man. It's
well,
definitely an interesting
I
window.
think the thing that some people talk, there's different ways to do it. Obviously, if you look at somebody like Nassim Taleb, I don't know if you've ever looked into him, but his strategy is interesting because his net worth, where how would he would do it like 80% of his net worth would be like super safe, and then like what he would do is just he would do 20% and he would just keep buying like way out of the money puts, and then he would just keep slowly losing. But then when you finally got the big crash every like 8 to 10 years, 8 to 12 years, you'd make a jackpot and double your net worth. um,
Mm,
the other way, this is interesting too, the way that the rich usually avoid getting killed too much during crashes is they have 1/3 of their net worth usually in real estate, and it's usually not even in investment properties. It's usually just the real estate they own. Like if you're worth, let's say you're worth 15 mil, you usually got a house worth 5 mil, or you got a couple properties, a vacation home in total, it's worth maybe 5 mil or something. Sounds about right,
hmm
right? And then maybe 5 mil is usually in equities, S&P 500, NASDAQ, stuff of that nature, maybe some Bitcoin, some gold, silver, maybe even commodities. But the last third of that net worth, you probably know where I'm going with this. The last third of that net worth, what access does someone who's worth 15 mil have access to that a lot of people don't have access to? Hedge funds. They usually put like a couple mil in a hedge fund, and most of the time the hedge fund won't even give that great of returns a lot of years. But usually when markets crash, because the hedge funds short stuff and they have good techniques when markets crash, usually they'll get a nice amount when the market crashes, and then they'll be able to redeploy that capital back into the S&P 500 and stuff like that and rebalance the portfolio. I don't know if you've
hmm
ever heard of that. I was
Oh
listening to,
yeah.
yeah, so I think that's a good hedge fund can usually withstand a bad crash. But if you look at hedge funds, I mean, a lot of them do bleed against the. I don't know how much you've studied or researched hedge funds, but most years their gains are pretty negligible against the S&P 500.
Yeah. Yeah, well, I mean, it's like active trading essentially occurring there, right? Like where they're like basically
Yeah,
just taking like the short-term moves and everything. So, um, yeah, it is it's a tough one, man. It's still something, like I said, I'm in like a position even just to be, honest, where it's like I'm still trying to figure out the best way to like try to protect my capital even in the next couple years here if this is something we're going to endure.
yeah,
um because yeah, it's like it's so hard to pinpoint. And if you're looking at like something aside just from markets pulling back and everything like that, I think that the AI issue, I think we discussed that in the past, right, where it's like that's something that I've kind of thought for a long time, that where one of the biggest reasons that markets crash is like unemployment, and
yep.
obviously all that goes into it. So what would be something that would take away a lot of jobs? I mean, it would be pretty clear that it would be AI, but it's just also just another thing. Again, like the contrarian in me now, I just see we're in just such a different place now because I default to the 2008 window where again we didn't have social media the way it was. YouTube wasn't what it was. We just kind of had like a few avenues, newspaper and the news if you were even keeping up with any of this. But that same narrative now where it's like AI is going to crush 300 million jobs, which is basically the whole U.S. Obviously worldwide, but it's a very real like narrative that I see with like going around huge channels that are getting millions and like hundreds of millions of views, and I'm just like,
Mm,
man, it's like a weird, it's just weird that everybody's kind of prepared for this, at least mentally. Again, it goes back to the whole like you can prepare mentally for something, or you can try to actually take advantage of it, but how it's one or the other. So if you because you really never know what's going to happen, so you got to really hedge your bets in some fashion. But it's just interesting that it's a lot of talk going around about that. So I don't know. I don't know what the outcome is going to be. I just know that so far that 20-year cycle is like we're definitely at the end game of it. So caution is warranted. It's just
yeah.
like you said, like how do we how do we prepare for it? What's the best way to come out of this?
It would be that it would honestly it would be that portfolio. I say you'd want to have at least 30% bonds probably. I mean, if you look
Yeah,
at
I think
that's
that
yeah.
I agree.
It would be something like for I mean the obviously cash and gold, really frickin' and then maybe like 20% SPY, 10% gold and 70% cash and real safe. That's how you would do it. And I mean you wouldn't miss out on like you would miss out on 20 or 30% if you're completely wrong, but it wouldn't be, you know what I mean? It wouldn't be like
Yeah,
the
I mean
worst
you're
thing.
looking at the risk there is going to be anywhere for that type of
Yeah. I was like
for
gonna
like 20% off the here or there.
Well, the thing too that I was gonna mention, like, I mean, if you look at what was I? Oh yeah. Well, this is slightly. You mentioned the changing world order, all that. I'd be curious on your view on that. You got to be careful what you say on that sometimes. But Pax Americana. Are you familiar with Pax Americana? Okay, so there's a period of peace, like after every new world order is kind of established, and it was before Pax Americana is like the period of peace, and it essentially ended when Russia invaded the Ukraine. That's essentially it shows the period of world peace kind of being over. Essentially
Mm,
the U.S. couldn't stop that immediately. It's still going on. That's essentially the end. Pax Britannica was the previous one, and that obviously ended with the beginning of World War II, kind of, or even World War One to a certain extent. I forget. I mean, it goes all the way back. There was Pax Romana, Romana. Yeah, Pax Romana was the Roman Empire, and once that the Pax ends, the period of peace, Pax being peace, I believe in this case. Once that ends, usually the world power only has like 30, 40 more years, 20 more years. Areas like that, and you're kind of bracing for potentially a worldwide conflict. I think it's at this point more drone warfare stuff like that. I mean, I don't think it's going to be as crazy as stuff in the history. I hope not. I'm not that much of a doomsdayer,
yeah.
but um,
I mean, there's a lot of I think AI without going too over the top with it, but I mean, I do think that that's a real threat to many things. And when
yeah,
you think about again, this is not something I've just drummed up, but I came across this guy, which again has tons of views. So it's something that everybody, at least in my mind, I feel like everybody could have came across already because when you got millions of views,
mm,
but potentially not because anybody I've brought it up to says that they never heard of it. But this one guy kind of, showcases how it's like basically like a timeline from now next couple of years, which also just happens to align with this little 20-year cycle. But the 20-year cycle also like literally aligns with what's his name? Mark Moss has pointed out a lot of times where like the 50-year cycle and 80-year cycle, like what's the 100-year cyclical anniversary of the Great Depression, coming up in a couple years here. So like it's is a lot of things all like when you're looking at confluence
yeah,
of like if we were looking at a chart right now, like this next few years is just stacked with a bunch of stuff. And this one guy going back to that video where he was pointing out like AI agents and stuff like that and the fact of like Sora video or not just Sora but we don't know what's real anymore. Like literally anytime I see something like a preview for a movie or
yep,
I'm literally at this point I'm just like I'll show my family or a friend and I'm like don't know if this is real but this would be cool. Like that's like my like
yeah.
default at this point is like I don't know what's you just don't know what's real at this point.
It's I
And it was showcasing
yeah,
how like there could be a huge conflict one time if like somebody makes some sort of a threat to somebody and it looks like it's coming from an opposing country and that could really you never know, right? Like it just like stuff like that could
yeah,
be what triggers something like that. So yeah, I mean we're also in that period of time there. I'm very much in tune with that. Universal basic income is another big thing that I think that we are running into at some point
That's
here in
a
some.
100-year anniversary of Social Security. It was 1930s, so you probably would see it in the 2030s. Yeah, I would
Mm,
think. What I was gonna say too, and I think this would correspond with what you were saying. 2 or 3 more years. I think the big thing that'll probably cause the next recession, if you can't easily make money driving an Uber anymore or delivering food, once that's all automated, and you're already seeing that in Miami. You're seeing those little robots deliver food. You're seeing that in Europe. I've seen that in
yeah.
Helsinki, Finland. Those little automated robots driving around delivering food. Waymo is getting into more cities. I think it's 2, 3 more years until that brings unemployment up to high enough where you can't easily get a job just doing simple stuff like that anymore. The
Right.
optimist will probably be around 3, 4 years, and that'll probably clean your house for you. I mean, that's another minimum wage job that's gone.
Yeah.
I
That's
yeah,
a really good point to bring back up too. We discussed that, I think, on our last couple of streams too, because that was a big one that I saw from a mile away, or like not that I just saw it, but that I had noticed a long time ago, which was like as soon as like Tesla started talking about robotaxi, I was like, man, that's a huge market, right? Where
yep,
a lot of people that anyways, we all know that, right? And then it goes into like even like lawn care, which is another, like, granted it's simple tasks and all, but like there's a lot of people that like own companies and do that stuff, and that just puts people out into the workforce, or into the like you said, like the unemployment line essentially. And then if you even take it a step higher than that, like there's all these everybody, and because of COVID time, we got the opportunity to make almost every company, like higher level company, went remote, and people moved out of that town, moved out of that state, right? And they were just working from wherever because they could do that for once. And all these companies now have retracted that, and because obviously, more than anything, like people are not as productive when they're working from home, as much as everybody likes to say. So it's like one of those
yeah,
things where they just had an easy cut to budgeting, by cutting all these people. And if you could come back to the office, or you could still work here if you came back, but people obviously wouldn't pick up and move. So that put a lot of people into, as far as like the remote work is pretty much done. I know like several people, husband and wives, where they're both like completely, out of job. Like they do stuff just to get by right now, but it's like they're applying for other jobs, and even just going into
mm,
places in town in like Tampa, Florida, big towns and stuff. There's not much, there's a huge pool of people. It's like 60,000, and they're like, oh man, the LinkedIn applications and all that stuff. Like it's not even a real thing at this point. Like nobody, he's like, I put in 2,000 applications over a
yeah,
month time, and he's like, I don't even get a call. And these are well, like, skilled people at that. So
yeah,
it's
definitely,
already happening there. And then yeah, like you said, you drop like, not to say like average people, but like that lower skill set, I guess you could say, or just like a
yeah.
simple skill set, not lower, but
Yeah.
that's a lot of people, man, that just hit the unemployment line. So
I mean, yeah, that if there's going to be another depression, I think it's going to be because of that. Yeah, I think that's the big thing. I mean, people always like to say I mean, I don't know about you, but I've heard since I was probably 3 years old that the economy was terrible. You're never going to find a job, all that type of stuff. But I think it is actually, objectively getting worse. I don't think it's bad enough for, to get into a recession yet, but 3, 4 years, I think the period of the next recession slash depression is 2028 to 2032, and that aligns pretty perfectly with that cycle and all that. So yeah. I want you to look at, yeah, MicroStrategy. Have we bottomed?
ah, it's another tough. So like when looking at Bitcoin earlier today, right, where MicroStrategy has a potential reversal set up here. And again, it's got room down. So it technically wicked down to like 105-ish. I think it was
Yeah.
like 105. Um, and with this is a bullish harmonic here. So even though it's, obviously bearish to get down, just like a descending channel, descending
Yep.
wedge, right? They're bearish on the way down, but it is a bullish setup when complete. This is a pretty decent one here. The only thing about it is it's got room down to like 100, and really a little bit below that, because honestly, I feel like well-rounded number like that, I feel like we'd probably punch through it a little bit. So it's
Okay.
hard to say, but I think that in this region, we got balance potential regardless, and the setup from here does take it back up towards like 220, 250. That's like our major target point, which is usually our B point, and then also the 382. They just happen to line right together. And then there's two high time frame averages and volume levels and all that stuff all stacked up there. So uh, I would say that if we get back above 141, that's where we could see a move there. And that's pretty decent little move, especially if it's going to come from where we are now. It's like an 80% pop. But
Mm,
even if that's not off to new all-time highs, it's still a good setup from where we are here. The question just is right now, it's, not that it has to do with Bitcoin specifically, but Bitcoin just has a similar type of setup where we might just see a little push back up to the local highs. This is like the weekly time frame, by the way. Come back down effectively. I'd say we probably take out 100,
mm,
maybe 98, 97 type of deal, right? Get everybody a little worked up there, and then we get that move back up, and
mm. Okay.
that's kind of how I'd play it off. But if we do get back above 141, then that's the on the daily time frame, definitely a weekly. So far, we are closing weekly candles below that right now. So far we have to anticipate a little bit more downside. But yeah, that's what I'm looking at there on MicroStrategy. And that would kind of align with Bitcoin doing something similar. I would imagine, obviously, the whole market would probably do a similar type of rebound where we get a little bit of a drop and a little bit of a pop, kind of in line with what you were saying, where the next couple months we get this ebb and flow. But yeah, well, I don't. You had mentioned MicroStrategy as well. What were you looking
So
at, or
the
what's your
thing,
thoughts there?
yeah, the thing that intrigues me about it, I wanted to ask you about the fundamentals of it too, but after talking, I just want to see if you have any concern about Sailor and what they're doing. But before you answer that, the thing that intrigues me about it is it bottomed out before Bitcoin and even Ethereum in 2022. It bottomed out in May of 2022 at your first wick down before everything. I mean, it did have a double bottom later that year. It did retest to kind of that area, but it bottomed against Bitcoin early. That's when it bottomed against Bitcoin right there, that May of 22. So that's intriguing to me. So one of my technique for this is I bought it, and if it makes another low, not against its USD, but another low against Bitcoin, I would convert back to Bitcoin. You know what I mean? I'm trading it against Bitcoin because I'm just trying to outperform Bitcoin. If it can't outperform Bitcoin, there's no point. That's my view on this.
Right.
Um, what do you think of that? Is coin just coincidental, or do you think it could repeat history like that and bottom out earlier?
Um. Yeah. Pro See, I think we do get another move like this, right? Where that bottom did
Mm,
come in there, like you said, but look how long we chilled
but
for.
it still did hit it still outperformed Bitcoin during that period. You would have been better off with strategy than Bitcoin.
Did it?
Yeah, believe it or not, if you look
Oh,
at
because we went lower, right? Because that's what you
yeah,
said.
because
Yeah. So we
Bitcoin went
obviously like
yeah,
bottomed here and then
yeah.
um
Like if you just kept doing
yeah,
the wheel
that's a big
method,
pop. That's yeah.
like do you know the wheel method for options at all? Like where you just sell cash secured puts and then you just keep rinsing and repeating with selling calls and just keep going. You get basically a 4% return a month, and assuming it stays more sideways. Like you could have done some serious damage back there with that.
Yeah,
Um,
for sure. No, I've never done that, but yeah, it sounds pretty good, like an arbitrage type of system.
yeah. Um,
Um
I
yeah,
was yeah.
it's
Go
oh good.
ahead. How about
After you.
the fundamentals? That's why. Do you have concerns about Sailor? Everybody on Twitter is concerned about what the hell Sailor's doing. He's buying at 126. Like, oh, which
Yeah,
is. Can you still hear me,
it's
bro? Did my
yeah, I
my
think your camera just cut out,
weird?
but I
Okay,
can
go
still
ahead.
hear you.
Go ahead.
I like the picture, man. Is that
It's an old
I
one.
guess is that like senior picture? Senior high?
I no. That was when I was 22 or 23. Wow, I guess I look young there. You thought I was 18?
Yeah.
Huh.
Last year. Nice. No, I'm kidding. Um, yeah, no, I definitely think it's a concern in that sense. At the same time, like I'm a pretty big technical person, so yes, like right now we're under 141. To me, it's like it could go lower, right? We could drop below 100. You could keep going. We could go all the way back down, right? We could lose support. Um, I don't usually get too wrapped up in a lot of the fundamentals heavily to where it's like it skews my opinion. Again, this is not something I'm going in with like long-term investing, so I'm looking at this as like a trading perspective. So that's probably a
Mm,
different take because I'm looking to just if I get into this which I actually am. I got into around these regions. I'm only looking to run it back up to this area. I'm not going to blindly hold it till there either. Like if it pushes 20%, whatever, I'll take some off. Not something I'm looking to like hold long term. And if that is the case, then yeah, I would say it's a little bit it's a little tough to look at some of the things that they are doing, and just even Michael Saylor's track record, right? Like I know that everybody kind of dogs on it a little bit, but we think
Yeah.
back to the old the .com era, right? He was kind of known as one of the worst investors back there. So, um, but not that that should, overly state that he'll never have, great returns or anything like that. But yeah, it's just different. I've also covered his whole system here with the because everybody likes to say like, oh, he could get liquidated or anything like that. And
Yeah.
they could sell, I mean, they definitely could get to a place where they, have to cover a little bit. But Sailor's version of like taking out positions and having any kind of leverage behind it is not the same as like leverage longs on BloFin or Bybit, right? That's like totally different world
Yeah.
where I think even he said recently, like they'd have to go down to like $8,000 Bitcoin and sit there for several weeks before it's even an issue. I don't know how true that is necessarily, but um, the other piece of me just points to like times where, like you just said, everybody
Mhm.
on Twitter's stating how, oh, he's doing all these things and they're kind of fearful of it. Usually that comes in around a bottom. So,
That's what if it's like last
yeah.
time. I mean, I bought some, and I'm even so crazy. I bought BMNR too a little bit. Have you charted that?
Only because you had mentioned it earlier. Yeah, I was just looking at that. That's actually a wild chart, man. Have you traded this a lot? Because this is like a 40x move right there. That was what, like
Yeah,
in last summer, 30x.
30.
And it's not the first time. I mean, it's
I don't know what they were doing back then. I don't know what was it? Was it
this was
mining?
2020.
What was the company doing back? Was it a mining co? I have no idea what it even.
Yeah, yeah. What I looked into it was oh, it's Bitmine. Yeah, this is a mining company. Yeah,
Oh,
so it's
okay,
like
okay.
like trading Bitcoin on monster leverage basically, but you got to like be really quick about it. Obviously, as you can see, this is like one of those things where like if Bitcoin breaks out, like this thing breaks out tenfold, but as
I've
soon as
never
it pulls
looked at
back, it
this,
like
and
it like flatlines again.
I've only looked at this in the shorter in the past like year or two. I've never looked at like the history of this. I've never. Oh my God, look at
Dude, it
that!
gets wild. I'll have to put it in log scale to even
What
get
the?
an idea.
This thing has got to be down like 99.9% from its. It was at 400. What? How is that? That's got to be a glitch. It was at 60 million.
So,
That has to be a.
hey, I think it was at 80 million.
That's a
Yeah,
glitch. That's a glitch, bro.
that must be.
That's got to be some type of glitch. How could that be possible? Nothing is
Were
trade.
you selling it? Were you buying it up there? 78 million?
My God, imagine. That's got to be some type of.
Yeah, I got no clue on that one, man.
I don't think the history of this before Tom Lee got into it matters. I'm more of the history in the last year or two of this. I don't
Gotta
think.
scroll for an hour, dude,
Yeah.
just to get back.
Yeah, I'm more in the. I'd be curious. TA from like this previous like blow off top. That's what I'd be more curious about.
Um, yeah, I mean, it's one of those things again, like where, from my understanding at least, is where like if Bitcoin was to push right now from like 60, you want to have a good pulse on Bitcoin. So if you're anticipating Bitcoin to break out, or not even break out, but just push 10-20%, this is going to go up like 40%. It basically just amplifies whatever Bitcoin is doing. So I actually could see this pushing up a decent amount here. I don't know if we're going to hit some. I got a few key levels, nothing crazy, but where
Hmm.
this all aligns at about 27, it's at $20 right now. So there's like, potential for like this 40% bounce.
Yep.
Um, so, I like that a lot. I like that spot. Otherwise, this is not something I'd be getting in for a long haul by any means. But if you're getting in for just, not for a long time, but a good time, I would say that 27 bucks is got my attention there. I mean, we could see something crazy if Bitcoin really popped, but I think
Well,
that
this is
Bitcoin
ETH.
has
I don't know if
the
you, bro. This is ETH. This is like they're trying to copy MicroStrategy, but with Ethereum. I don't know if you knew that.
for Bitmine.
Yes, it's Tom Lee. You know who Tom Lee is?
Yeah, yeah, yeah.
This is his thing. He's trying to copy this and SBET are the two that are trying. It's an ETH treasury holding. What it's leveraged
Mm.
Ethereum. He's down 7 billion right now, and he keeps saying ETH's going to 6K in 2 months.
Yeah, he's gone off it. Um, him and Sailor both, man. They're just
But
like kind
no,
of.
this guy Sailor looks like the most conservative, Puritan compared to. Go ahead.
Oh yeah, you broke up. You said Sailor looks like the most conservative.
Yeah, yeah, compared to this. I mean, this is down 90%. That's what MicroStrategy crashed in 2022 to 90%. So I would think if you did a tight stop loss below the low, like I don't think you want this any lower than that low that it made, a week or two ago. I don't think you want it any lower than that. 88 only? That's all it was? I thought it was 90. Okay.
That's
I think
90.
you missed.
It
You
is
got it.
90.
You're not. You
Yeah,
didn't go all the way. 89.
yeah.
Okay, 89.
It's 90.
Yeah.
Yeah.
I think it's 89, but I don't think you want it under 90%. You know what I mean? I think here is like I sold a cash secured put on this with a strike price right below, like at $17. And like if it hits, I'm just gonna like sell that and convert to Bitcoin or whatever. I'm just trying to wheel this a little bit. But yeah.
Interesting. Yeah, I never really messed with this. I just looked at it for the first time today, I'll be honest. So, and I thought it was bit mine. LOL.
Yeah.
Yeah, interesting. So when did Tom Lee buy it or get involved?
This was
Exactly.
back when it went nuts. When it went nuts back there. Yeah, not that the previous all the way that
That big
30x
wick.
in July. Yeah,
Okay.
or June. Yeah, July. Yeah, yeah.
Interesting.
I knew a lot
Yeah,
of people
before
that bought that top
before that,
too.
man, I mean, this thing has just gone.
This might be glitchy, bro. I don't think this. I don't know if I trust these previous highs. I don't. Well, maybe in
Yeah, that's
21.
that's from 2021.
That might
So
be
it hasn't been
okay.
like a lot.
Yeah,
2021, 2025, yeah.
yeah.
Jeez.
But
Yeah, I mean, I'll look into this because that's interesting. Yeah, I thought this was with Bitcoin, so for ETH, that's
no,
even.
it's ETH. But the sequel is always worse than the original. Like I'm just gonna sell and convert to Bitcoin or convert to MicroStrategy if it makes a lower low there, or if it makes a lower low on its Bitcoin evaluation, I'll convert over. That's kind of the gamble I'm taking.
Yeah.
Right there. So it's like a trade, like I would say. It's kind of like a potential versus Bitcoin type trade, very minimal downside, high upside. I mean, probably
Hmm.
minimal downside unless this damn thing just crashes to $1 tomorrow. But I mean, so there's that. Trying to think anything else you've been looking at? S&P 500, NASDAQ, that type of stuff. Do you think that's headed down farther this year?
Yeah, it's again, we're like in a place I always kind of like preface who like most likely people that are in the markets today have been in the markets, right? For multiple years, like the stock market at least.
Sure.
When and I say that because somebody that's just now coming into the market, which I don't find too many these days, like retail people are kind of like not really that overly involved at this point. But
Mm.
for somebody that's like, I want to deploy some new capital today, it's like we're kind of in a limbo spot
So you're
where
saying you don't think retail's buying the dip on Bitcoin too much? That's what you're thinking?
oh, just on anything. I mean, like
Okay.
even
Okay.
like heavily. I could be wrong, man. I could have a
Okay.
bad gauge on that. I just
Yeah.
um yeah, I mean, I just feel like, especially with Bitcoin, honestly, I feel like ever since we kind of priced out a lot of people, to be honest. I feel like there's a lot of there's like probably an echo chamber to some degree of like people like yourself and myself or people that have been in the community or in the space for a long time. But the average person in today's economy, especially with how tight and how crazy everything is and everybody losing their jobs and whatever,
Mm.
I don't think they're rushing out to buy even $60,000 Bitcoin, even recognizing it's 50% off. And I know for a
Probably,
fact
yeah.
that like family members or whatever will say they come to me these days and they say, "Oh, I saw silver is down," or like I don't even get like the "Oh, Bitcoin's down. How's everything going?" Like it's like, "Oh, silver's down. I hope you're okay." And I'm just
Silver.
like,
Oh my! What'd you
it's
tell me? You bought
yeah. I'm just
silver?
like, it's still hella up, but it's down from where it got to. It's just weird, man. I don't, and that might be a bad like barometer of that, but
No,
uh,
I think retail interest is very low. YouTube views have been very low for crypto channels. I think a lot of it's because altcoins have done such crap; they've fallen off. I think that's a lot of it. Meme coins have fallen off. I mean, I think it's a different view, but I wouldn't say, yeah, it's hard to gauge. I mean, I would say it's less. Yeah, I think we've kind of gone back to the reality. I think everyone's given up hope for because I think the narrative from 2022 onward was that they were going to print a ton of money again, like 21, but that never came to fruition. And so far, they've
Right.
just generally been hawkish and acted how they're supposed to act. Like, I think that 2021, 2020 is like a once in a lifetime type of event. You know what I mean?
Oh, for sure. For
Yeah.
sure. Definitely a once in 20 years event.
That would be a great blow off top on the NASDAQ 7700, I think, in a year or two.
Oh, this is S&P,
Oh,
but
I see. Yeah, yeah, that's right. Yeah,
yeah.
S&P. Yeah.
Yeah, so for S&P, I mean, I've targeted one of two. So on the ES chart, 'cause I look at that too. Let me see where it is. We came down to that region. I had this zone topped off too, right at 7K. So essentially between 7,000 to 7,700. Um, it's kind of where I've been looking at for the S&P. Obviously, that's a pretty wide, wide window. That's like 10%, obviously. Uh, and it's like one of those things where I always kind of point out that we're like could easily still maybe float up a little bit here, but it's not really worth the risk in my opinion for like new capital by any means
Mm.
because it's like 8% up versus we've only been in up only season since April. Like we've had no real corrections and at least the bare minimum shallow correction, even if we were to get
Mm.
continuation back up, I look for the 382. And that sits also right at
That's a
2024's
huge
high.
area. I could see us. That's like 10% down from where we are right now. Yeah.
Big zone, yeah. So like that's
Yeah.
why I say like we're in limbo a little bit because it's like you could get that push, kind of doubtful. We'll do kind of look a little top heavy here, but it could still go up from here, right? So that's just kind of where we'd be heading to. But otherwise, it's like you almost have an equal risk at this point of at least pulling back to 6,100. So that's again, like you said, like 11% from here. Um, to and to like tote that with like gold and silver both kind of popping off on some highs recently. Granted, it's like the S&P and Nasdaq and Dow haven't really budged at all on anything's pullback. Like gold, Bitcoin, and silver all saw 40, 30, whatever percent pullbacks, and this is still pretty much ranging at the highs.
Mm.
Nasdaq is the same, kind of heading down a little bit here, but same thing. I've had like the most simple outlook on the three of them, the Dow, Nasdaq, and S&P for so long, and I feel like the three of them have basically just traded sideways at all-time highs for so long. Um,
Yeah, a lot of things have too, man. Like insurance, stuff like that. There's a lot of. It's not just the. Well, that's probably obvious, but yeah.
And then Dow did break 50K. So that's, something of note where, again, it broke that big psychological barrier. One target zone I've been looking at it just from a trend-based extension alone, where it's not just a solid number like 50,000 even, is 53K-ish. Again, is it worth the squeeze at this point for a 6% run here?
Yeah.
Probably not when we've
Well, I
just been in
mean,
again,
who
just
owns the
straight up
Dow,
only.
bro? Like, have you ever traded or owned DJI? I mean,
I haven't, but I'm sure some older folk,
I don't even think old people own the Dow, man. At that even.
What's funny is like I remember in 2020, right as we were making a $27,000 high, right before COVID. So it must have been, yeah, like right here. I was watching like something, MNBC, CNBC or something, and
Okay.
the woman that was broadcasting, literally, it was like 27,000, and she put on a hat that literally said 27K, and then with the 28,000, she put on like it was like the biggest proud thing. I remember my wife and I went out to dinner that night, and
Oh,
like
you're,
the
you're
the
talking about like in comparison to Pam Bondi.
No, I just it was just
Oh,
it was just this is like this is the only period of time where I feel like I really saw and you were referencing like who does what with the Dow. It's just like
yeah.
there's seems to be a lot of people, but like you're kind of right. I really don't ever hear about it, but I remember seeing a lot of people be super excited back here, like to a point where there were people at like a bar like cheersing to 28K
Oh my
right
God.
before, dude, right before the meltdown, bro. It was pretty interesting. So to hit 50K again, it's like something where that excitement was there then, and now it's kind of crickets, man. Like our climate is different here, though, man. Like we're in a place where like I think everybody's not even really looking at the markets. Like, and I say everybody, it's not obviously everyone. There's a lot of people that are, but I think for average people right now, man, and people that are just worried about their day to day, like they're worried about that. Like they don't care about anything in the markets at all.
Hmm. Interesting. What was I gonna? Yeah, I mean, my view is that you'll come down a little bit this year with S&P 500. You'll get to those peaks, the peaks that, well, you can see it on the Dow too. It's that same, yeah, kind of the 11, yeah, that exact thing. I would say that's the most likely path. Maybe you bottom before that. I don't know. And then you top out for the decade at like that 7,700. Like, I want you to, what percentage from that bottom, from those peaks to the 7,700? I want you to draw that out if you
What
don't mind.
percentage it would be?
Yeah, like from if we were to bounce from there, yeah, if we were to bounce from there all the way to that 7,700. So if we were to like, that's probably
Gotcha.
like from six to that's got to be yeah
20, 30%.
25. Yeah, around so
Yeah.
if we get, let's say we get 10% a year or 8% a year for the next 27, 28. Yeah, if 27 and 28 and 29 are decent years, then you would be 2028 or 2029, that would be a peak at 7,700. Um, that's what I would guess, yeah. And then from there, I want you to zoom out if you don't mind, or maybe you don't have to. Zoom out to like the high of 2021. Yeah, so that line in the sand I think is huge. Like that line in the sand right there. I think 4,800. Yeah. So if you were to correct from 7,700 to 4,800, I think that's not a fifth. That's like a 45 percenter. I think from there to that's all it is. Okay, probably lower. I think you would go. Maybe a little bit lower than maybe that. You know, what's 50?
I think there's a yearly pivot under here too that's
Yeah, there's
untapped.
something. There's a lot of somewhere in that zone.
It's right
Um,
there actually, 4,400.
that's what I would guess, and that's very typical of recessions when you finally hit one. Um, yeah, that's what I would kind of. I think that line in the sand back there is pretty big. You know, that 4,800. They're always about. That was the worst one. That was one of the worst. I mean, UK during Great Depression was about 45 to 50, so it doesn't have to. It could only be 40 to 50. That was 50. That was fun fact about that one that you're looking at. That was the first time you had three consecutive red years, 3 red years in a row since like the Great Depression. That one right there. It's
Hmm.
very rare you get three red years in a row with the S&P 500. I think it was 1929, 1930, and 1931 previously. Yeah. That
Three
was a
years at
long bear. That was one of
50%.
the longest bear markets in the history of the U.S. stock market. Because a typical bear market only lasts 10, 12 months, 8 to 12 months.
Right.
Um,
Yeah,
yeah.
that's this little box up here too is comprised of a couple things. That's why I have it marked as the 1.68. But even like if we were to do this little bounce here where it's from that low, let's just assume we do that. It's like a gold pocket essentially
Yep.
in price discovery on top of the, like yeah, it's just a lot of stuff would line up with that
And you know what that
74 to
also, sorry to
77.
interrupt, important. That
Yeah.
also would line up with probably Berkshire Hathaway at $1 million.
Gosh.
It would be the same general jump, that 20 or something. And Warren Buffett's goal was always, I don't know if you know much about that, he never would split the stock because he wanted the damn thing to be a high number. I think his goal was always to live to see it at a million.
Mm-hmm. What's the ticker for Berkshire?
BRK, BRK. BRKA is look at BRKA, dot A. There you go. Yeah, yeah.
Yeah, $750,000, man.
25% you need to get up to a mil, which is not that you're gonna most likely hit that by the end of the decade unless you see a bad recession before then.
I remember seeing this at like 400,000.
Yeah.
And this is like one of those situations, obviously, like, the everything behind it, the fundamentals and things with this matter, but it's like, how do you buy something at $400,000? It's like,
I don't know
but
if you know too much about it. There's Berkshire Hathaway B is the one that's $500 a share. They made a smaller one. Um, oh, are you making the psychological standpoint like it's
oh
so
yeah, I'm
yeah,
just
oh
saying like
okay.
this is one of those things where it's
Yeah.
like, oh, for myself personally, I just never I just can't physically come in and there's gonna be
Yeah.
times when you don't buy something that's up sizably and it keeps going up, but it's like for the most part that will, win for you over time because it's like even like
Yeah.
in recent moves like gold or silver and like all that. Yeah, if you came in a silver at like 60, $70 for a hot minute, yeah, you would have doubled it almost, but you would have had to, be on the trigger and uh ultimately you're back down to break even or at a loss and things like Zcash and Monero even recently, those were really good examples. This is just one that
Oh yeah.
kept going up, man. Like that's just wild.
No, I mean
Yeah, so
it's yeah.
when you're buying stuff like this, do you have to? I mean, how do you even buy this, dude?
Oh
Like,
no,
where do you
there's
buy this
you
from?
could buy fractional shares, but no, there's if you type in BRKB, it's the same exact thing, and it's $500 a share. They
But what if
made
I want
a
to buy this one? How do you buy this one? Where do
oh,
I
you just
go?
need a lot of money to bro. You could buy it, Fidelity. You could buy it.
Just go to Fidelity and it's in there for eight
Oh
hundred
yeah, you could
thousand
buy it.
for
Yeah,
one share.
It's I looked
That's
it up. There's
nuts.
like a few hundred shares traded a day, I think, of it. People trade it, believe it or not, they do. The big thing people do though is there's a lot of arbitrage. The rich people do they arbitrage between BRB and BRA. So if you own BR, sometimes there's arbitrage and you can convert between both of them if you have enough capital and you could. I don't know if I think that's yeah, it's allowed. Yeah, there's nothing illegal about that. I don't think.
Hmm.
People have done arbitrage with that. There's probably some. I would say there's a lot of like maybe 60-year-olds, 70 years olds with that in their like IRAs and stuff with a full share of that. I could see it. Um,
This was made in the 70s.
even before, I think. When does that 19? Yeah, it was in the 70s. The 70s, he got like 100x. If you invested in it in the 70s, you would have probably became a billionaire by now, or you would have became
Dude.
multi. You would have turned like 10 grand into like millions. It doesn't chart all the way back to the 70s, but it was around like since 1970.
Dude, that's a chart, man.
I mean, it's gotten diminished returns. He has not been as good as,
Yeah.
yeah, he's,
But
but it,
still,
yeah,
that's like literally when anybody ever asks like what is a healthy chart, like that's it, dude. That's you don't see
yeah, oh
no
yeah.
um you don't see none of this. Like that's just
Well, it's
up
the,
and to the right, dude.
I mean, there's nothing you could easily buy on, on Fidelity or on anywhere that's going to give you, Japanese stocks. It's going to give you foreign bonds. It's going to give you American bonds. You know what I mean? It's going to give you
Right.
some AI. It's half bonds right now. Like there's nothing else like that's trended up with time. It was half bonds pre '08 too. And he still got railed though. In '08 as well. You would think he wouldn't have gotten railed as much as he did, but he did get railed pretty bad in '08 too. Not as bad as the S&P 500, but because you would think if you're half cash, what I mean, if you're half cash before the '08 crash, you would think you would be light years ahead of everybody else. You know what I mean?
Right.
You would
Right.
think he would have only went down maybe 20 or 30%, but no, he went down a lot. So that's why it gets
Hmm.
a little bit weird. I think it's just I think it's suppressed a little bit too. It probably even should be higher than it is because it dumped against the S&P 500 when he announced he was stepping down. He's not even the CEO anymore, technically. It's
Dude,
great.
$200. That's incredible, man.
Yeah. Well, I mean, he could have split it. They could have split it a million times. It could have, you know what I mean? The market cap is nothing. What's the market cap? It's a couple hundred billion or something, I think. Like it's nothing. I'd say maybe 300-400 billion or something. They just bought the New York Times. I didn't even know it was a publicly traded company. Um, they got good exposure. Like I buy it just because I like the makeup of it. Like when I look at what it's made up of, that's what I like on it. Um,
Yeah.
but the thing is, nobody when I post it, if I talk about that on YouTube or stuff, no one cares. It's just not,
Right.
yeah, like nobody's.
Well,
It's like yeah,
once again, it's like something that's priced out so many, and
yeah,
again, it's like something that most people are going to look at this and be like, "I'm not," for same thing. Like I just said, it's hard to come in and buy something that's all the way up here.
yeah.
But if you do it right, I mean, it can probably pay off. Yeah, it's always been a thing I pay attention for with him too, especially like at COVID time. But I always feel like that's just like some sort of a FUD type of situation where they'll like a lot of people focus in on like Warren Buffett selling or being in cash, right before even before a rally occurs. Sometimes he'll like take profits on stuff from like '08 in 2017, and people don't realize the difference there, right? It's like not like he's just yeah, he
It's
knows what he's
high,
doing.
yeah. I mean, he's been high cat. The way it's not technical analysis he's looking. Well, he does look at technical analysis from a perspective of like if it's down a lot, you know what I mean? The whole philosophy is getting good deals. Like he bought the dip on United Healthcare when the CEO got shot. Like it's just good deals type stuff. I mean, they bought Google though, but that's the view is they bought Google because of the Greg Abel, the new guy. That's who just replaced Buffett. Is this Canadian guy, and he's younger, so that's that view. But it's funny, like Warren Buffett's last trade before he stepped down as CEO was New York Times, and that's what he started with was like a paper mill or something. It's kind of ironic. I think he did that on purpose. They started with
Hmm.
because Berkshire Hathaway was a paper mill or something. I think it was something news related. It failed, but he liked the name of it, so he kept it. The whole story behind that. Um,
Hmm.
so that's the
That
thing.
makes sense. I have actually thought about that before. I'm like, what is that?
Yeah, it's
It's
some
obviously
type
not his
of. I don't
name or
even know what a
nothing.
paper mill is. It's a paper mill, but I don't know what a paper mill is. Do you know what that is? I don't.
I think that's where they make paper,
Oh, maybe
if I
it's
had to
that. I
guess.
don't. Yeah, I don't even. Some of these
Like a
terms, these old
like a
people.
wood mill,
Yeah. Do you know what a carbon
lumber
copy is?
mill.
A carbon copy. Do you know what
Uh,
that is?
I mean, like from like in paper, like credit
Yeah.
card
Yeah. Okay.
receipts.
Yeah. Yeah. You
Yeah,
know what
yeah,
that
yeah,
is. Yeah. I didn't know what that
yeah.
was.
Oh yeah, really?
I've
That's the only
seen it.
time I've
I didn't
heard.
know what it
Yeah,
was called. You know what I mean? I didn't. Um,
yeah.
the last thing I'll have you look at, it's getting late now, but look at Circle. I don't know. Somebody wants you to look at Circle. Maybe. I don't know. Have you charted that? I don't. Oh, you
I
got
haven't
it
looked at it
there.
in a while, but
Okay.
it's on here.
I'll look at Palantir if you don't mind after quickly. If you have,
Okay.
that's a cool one. Oh my, this thing looks awful.
Yeah, I mean, she's just stair stepping. The last time I looked at it must have been around like when we were probably up in this region because I have
Yeah.
this here and then I had a range built up. But yeah, I mean, the thing with some of these two, let's just take a peek. It is funny because a lot of the stocks, it's the same thing with crypto, right? Where it's like you have this huge bull run essentially, but not for the whole market. And the same thing with like the stock market, right? Like not everything is up. There is quite a bit more on the stock side than I feel like with crypto. But yeah, let's see. Just label that up. It's pretty far from where we are right now. Um, yeah, Circle. As far I haven't heard anything bad. Do you know anything like negative about like the company or anything like that? Or
When I used it back in 2015 and 2014, it was pretty good. I bought Bitcoin there for 200 bucks.
I was gonna say, you bought it for 200? What do you mean? Like
Yeah,
just $200
Circle was
worth?
one of the websites that I don't know anything about Circle now, but Circle.com was one of the first websites you could buy Bitcoin on back in 2015 or 2014. So I bought Bitcoin there
Interesting.
back in 2014. It was really easy to buy Bitcoin there with like a debit card or something. Like I turned 18
Uh-huh.
years old and I had a debit card, so I bought Bitcoin on there. Um,
What a chat, bro.
yeah, yeah.
Dang, this thing is.
I didn't keep it unfortunately, but so then that's what I remember it from. But I don't. They're USDC, right? I don't even know the fundamentals. I don't know what they do. I don't even know what they do now. They don't sell Bitcoin anymore. They used to.
No.
I remember I was disappointed. I went back to buy Bitcoin again in like 2017. You couldn't buy Bitcoin in there. um,
Yeah, down 82%. I mean, from at the low, like currently
yeah,
it's down 80-ish. Um, yeah, just like quick glances. I mean, it could, it's got some room for upside, of course, because we're basically on the floor, but more locally, I mean, we're coming into like an I would say we'd really want to see this get like at the moment you just got to assume it's going to head lower unless it starts doing these
yeah,
things, right? Where you got to clear $66 for one, which is pretty much what we're heading into, so that's a good sign. The other one, I mean, without even going too crazy, just, get above these highs essentially. So get back in above that $82 or that's $90, I'm sorry. I highlighted this up here, this 147, because that is like the new yearly average. So very similar to what I was pointing out with Bitcoin, where
yeah,
everything's got that average of price. It's like a mean reversion. It's just like, snapbacks to the 200 day and stuff. You could get something like that. It's just, a lot of these other stocks that are kind of dead, they don't necessarily always get it's not something that's like a given by any means, but that is, if you're putting on any risk down in these levels, I mean, that's how I would kind of stair step it. You got to really get above 66 for any kind of life. Otherwise, you really just got to anticipate more downside at this point. Just very much downtrend intact, but that can always change. Palantir was the other one.
yeah. That's I don't. Have you owned that? Have you ever traded that or owned that?
I haven't owned it. Nope. I've been tracking it here. Um,
Okay.
yeah, so it's the same thing as like kind of like the S&P right now. Is like just kind of looks a little top heavy. For me, with something like this, yeah, just this been a beast, right? Since what, 2023, pretty
Hmm.
much just an up only environment. It definitely
Yep.
had some pullbacks along the way.
Went
4x
30x. Yeah.
to the upside. I just highlighted it. Like anytime I have a red level on my chart is usually like a really key region. In this case, I have just all those. Um, so when we were trading up in this region, I was targeting the same thing. So what we were just looking at on Circle, where 147 was a average likely to be met, we generated the same thing right here, 149. Already kind of blew through that. We have quarterly just volume levels basically, which is
Okay.
what we come down to so far. And not to say we can't catch, get some footing down here, but you uh, very similar to that 200-day mentality. If you're below it, you're bearish. If you're above it, you're bullish. So line in the sand for any type of upside is got to get back above 150. Otherwise, you're just kind of probably going to range right here. And if you lose 124, you're probably coming down to fill in some of this stuff down here. So that's kind of like your two, right where we are, basically that 124 to 150, so that $25 region. You kind of want to hold that area. And then as far as any more confirmation on some more upside, granted, like I said, this is not probably the first thing I'm jumping into, just personally with it being up so much. But if you're a holder already, you want to see that 150 get reclaimed for any upside. But otherwise, this could come down pretty sizably.
Mm,
And even just like, let's just take a local. Yeah, it's just down in that region. So um, yeah, the yearly average though for me it would be the big one. So that 149. To get back above that, then this is just a little deviation. You took all the lows and you could do exactly what we've kind of seen,
I
right
don't think it's going.
here. And
That's not going to happen, man. It's going down.
yeah.
It's going down,
Yeah.
probably. I mean, most likely, it's 60 to 80 would be my view. 58 to 80 for that pocket.
Yeah. That's where I'd probably feel good about looking at this personally. But yeah, like I said, wouldn't be the first thing I'd jump into, but that's where I'd see.
So we've been on about, let's see, an hour and a half. If there's anything else, any other things you want to look at, any other thoughts before we wrap this up?
I think we covered a good bit for our quarterly roundup.
Yeah, yeah. It's cool. So the last question, what comes first? Bitcoin to 90K or Bitcoin to 48K or 50K, let's say.
Mm, mm, mm. It's a tough one, man. Paul Barron always hits me with these, and it's like the most out of context like questions that you just it's definitely for show. But it's one of those times where like if it's gun to my head and it's like you have to like yes or no without any like if this then that situation, then I'm probably gonna say 50K comes first.
Okay, okay.
What do you think?
Yeah, definitely 50K. How about
Okay. Oh,
40K
now
or
we're gonna
90K?
Rolodex this. Do it again. What was that?
42K or 90K?
I think we're in a place right here that I'm gonna leave it at 50 would be like a lowest at the moment, and then we probably push back up to like 90.
So yeah,
So
for that I would lean more towards 90 before 42K in all likelihood. That's the
yeah.
tough one though. That's like I don't think I would look more, the betting odds are low that it would go down to 40. Like you'd make a lot of money if you put on Polymarket that it's going to 40. Like that's probably like
Mm.
a 5 to 8x return right now. Like if it went to 30K even, like you'd make a ton. Like you'd make easily a 10x. So
Yeah,
yeah.
the thing with like even if it's gonna go down that low, I feel like it's gonna be a dogfight, man. Like I mean, we're
Yeah.
more than likely gonna see stuff like this where you come down and we take lows and we push back up sizably to like even back
Mm,
to like 80s. Might not hit 90 or anything, but 75, 80K could be in the realm. And then, we're in the time frame of not even in the realm. We've been in this time and time again where we just run into ranges after ranges after ranges. You get this range right there, you get the drawdown, we do something like that, maybe we push back up, we range around again for a few more months before we dump back down. You get another range and then you dump back down
yeah.
again. Um,
Snooze
it's
fest,
it's
yeah.
always a battle. It's in the days in the time. Always a hard part, but I could if I'm honest, I feel like I could see 50 before a 90 because I could see something like along these lines where we take this local area and maybe we don't even push to like 84 and then from there we even roll over again or something like that. Um but at the same token, we're at a place where we're down 50% try not to get too bearish at these points because we could easily, push up, still make another lower high and roll over. So it's one of those things to me where I'm just taking the information as it comes. It's really hard to give like a big, solid, like, what would you lean on the most type of
Yeah.
situation, at least personally. So, but I always go for those things. It's always fun to see how they play out. Almost all of them are wrong, but
A lot of times, yeah. Any parting words for everybody watching for wrap up?
just hope you all are doing well, and thank you all for tuning in. Always a good time to be on Evan Aldo's channel, and I look forward to seeing everybody again in the next one.
Where's the best place for people to find you and follow you? Where should people go?
If you want to follow, you can follow it DataDash, Data or DataDash, over on YouTube or
Okay.
X, either one of those. So, and it's got all my other socials on there too.
Okay, nice. And what do you do on DataDash? Is it just you, or it's other people now, or how is it? How does that work?
The original creator, Nicholas Merton, he is he and I make videos. Yeah, we
Okay,
do
nice,
twice a week. So like,
cool.
yeah, couple videos a month there. Pretty active on X as well. And then I have I do a bunch of short form stuff just for my like personal brand, basically on X. I'm sorry, on Twitter,
Okay.
Instagram, and TikTok. Oddly enough,
What's your
found
TikTok now?
found me over there dancing.
What's your handle?
It's my name, Paul Sampson,
Okay.
0x.
Okay,
Yeah.
gotcha. Cool, man. All right, so I'll see you guys. Smash the like button. Check out Paul's channel. He does a lot of good stuff. Really good analyst.